Hi, this is Tom Essaye from Money and Markets TV. With all the attention on Europe and the U.S. stock market lately, you may have missed the latest deal on the M&A front. China's largest offshore oil producer, CNOOC, is buying Canadian energy firm Nexen. The first thing that struck me about the acquisition was its price tag. CNOOC will pay more than $15 billion, or $27.50 a share, a whopping 66% premium over Nexen's 20-day average. So why does CNOOC value Nexen so highly? Because of its development of Canadian oil sands. Nexen is the majority owner of the Long Lake Oil Sands project, which has huge potential. But so far, the project has been producing at only half of its capacity due to major technical problems. However, CNOOC seems willing to look past the difficulties and focus on the tremendous potential of the oil sands region. In fact, last year the Chinese firm bought the other player in the same Long Lake project, OPTI Canada. And it's not just CNOOC. Other Chinese energy companies are also making big investments in Canadian oil and gas producers. This trend tells me that Asian firms have determined it's cheaper to buy companies with producing assets rather than exploring themselves. It's also clear that the Chinese companies are targeting more merger-friendly Canada because of the protectionist stance in the United States. And this week's merger will only accelerate the trend by putting pressure on other large energy companies to snap up Canadian producers while they still can. Finally, the deal is drawing investors' attentions back to the oil sands. Despite the logistical problems, Asian energy companies are clearly focusing on their potential. They're thinking about long-term demand growth and what it will take to meet that demand, not just for the next year or two, but over the next several decades. One way to profit from this trend is with the iShares MSCI Canada ETF, symbol EWC. It's a broad-based fund, but energy is the second largest sector represented. So, it's likely to benefit from any further consolidation in the industry. As a contrarian investor, I always look for anecdotal evidence of larger trends. And CNOOC buying Nexen certainly qualifies. It indicates that Asian firms will continue to target Canadian oil companies to secure the oil and gas they need to fuel their growing economies. I'm Tom Essaye from Money and Markets TV, and thanks for watching.